Hey guys, it's BlockchainBrad, and today I'm very excited to talk to none other than Brian Cai. So Brian, thank you so much for being on the channel today.
Hello everyone, hello Brad. It is my pleasure to be here to give some, contents about Fortuna.
And we are so glad, and obviously you've explained why you're here with Fortuna, with your mentioning of this interesting company. So guys, if you're not familiar, we're talking about Fortuna as a very exciting blockchain. On their website, they explain that they are trying to make the world more transparent. And to do that, they're going to be the very first blockchain, allegedly, to be a platform for global OTC derivatives markets. So to explain that better, to explicate what that is, we have Brian, who is a very important graduate of Yale, actually, but also very experienced in the finance sector. So before we start, Brian, can you tell us a bit about your background? Obviously Yale, but what happened after your studies as an emeritus scholar?
Sure. Actually, I earned my master's degree, majored in computer science from Yale University in 2011. And after my graduation from Yale University, I just began my career in the financial area instead of the programming industry. And I have been occupied in investment banking, the corporate finance, such as supply finance, cash management, and the family trust things. And then I switched my field to the private banking area. And I have worked in London, Hong Kong, Shanghai, and Hangzhou. Yeah, and before I launched Fortuna, I was the general manager of private banking department of a Chinese commercial bank, which is the fifth biggest Chinese commercial bank in China, which is called Bank of Communications.
I see.
And it is very large. And I managed over $5 billion financial assets instead of my customers, my private banking customers. Yeah. So I have a lot of good relationships with the insurance company, the trust company, the wealth management company, the private equities, the hedge funds. I have a lot of relationship and the connections with all of the star companies in the Chinese market. Yes.
And obviously you're still very young, so you've had a lot of experience. You've done a lot since you graduated. I noticed also that you have won significant awards in the finance sector, and most importantly, you've been a vice director and a director of different companies. So that gives a lot of faith to those people trying to understand what the experience is behind the Fortuna project. So thank you for explaining that. If we could talk about now the premise, the idea, and the key precepts of Fortuna, the fundamental question to ask is, what is the OTC derivatives? What is Fortuna actually about?
Okay, so OTC derivatives is kind of derivatives different with the common derivatives you can see on the exchange, the commodity exchange like CME. Okay, so let me give some basic introduction about the derivatives firstly.
Okay.
The basic conception of derivatives is about it is a contract about the price in the future.
Okay.
So we have
futures. It's a futures derivative.
Yeah, about the price for purchase or sell in the future. So the common exchange is the futures, the forwards, the options, the swaptions, all of the derivatives. And there are two channels for you to buy the derivatives. The first channel is the exchange market, which is the CME things, the commodity exchange things. And then the second channel is the OTC derivative market, so which is basically a peer-to-peer transaction network. Like I traded with the Brad, right. We don't need any exchange as the intermediary of us. So what's the difference between these two channels? The first thing is all of the derivatives traded on the exchange, there are big advantage of the exchange markets, which is they have a very, very sound margin system, which can eliminate the counterparty risk of the derivative trading activities.
Right.
For example, if I want to trade a derivative with Brad U.
Yes.
So if we want to trade let's say an option of the stock on the exchange, so both of us needed to open a margin account and deposit our margin money into the margin accounts. And if your money is not enough while the underlying asset prices fluctuating, so they will give you a margin call to let you deposit more money into the margin accounts. And then if you don't do it, they will clear the margin accounts. So which are the basic mechanisms to control the counterparty risk of the derivative trading activities.
So essentially you're talking about very centralized controls, very centralized mechanisms, and also a very expensive process.
It's
in the sense of cost to the user.
It's not very expensive. It's acceptable. It's acceptable. It's not very expensive.
But I suppose, you know, just to qualify that though, it may be acceptable from the top down, from those who create the system, but essentially for those who don't actualize those calls, you know, and have investments, to be fair, it can be quite expensive for the user because they are essentially using a centralized system that is beneficial for the institution.
Yeah, sure. And but the biggest disadvantage of the exchange market is not the fee. It is the standardization.
I see.
Yeah, because all of the derivative contracts on the centralized exchange are published by the exchange. It is not designed or it is not driven by the market.
I see.
So there are a lot of possibilities for the customers who want to trade something that cannot be offered by the exchanges.
I see.
And another thing about the standardization is all of the transactional elements, such as the duration, such as the margin ratio, such as the deal structure, cannot be changed a little bit.
Right.
Cannot change a little bit. It's just like you go to a McDonald's and you want to buy something. Everything is settled. You cannot change the taste. You cannot change anything because it's standardized products.
I see.
The only choice you can make is to accept it or you walk out. So that's why there is another channel which is called OTC Derivatives Market.
Okay, so just a moment, just to clarify as well to help people. So essentially this initial market you're talking about is conditioned by almost a concrete, inflexible system. It doesn't have the ability to really accommodate for the change the blockchain is going to be bringing. So you're moving across now to look at OTC?
Yeah.
So what's that going to bring us?
So another channel is OTC Derivatives Market, right?
Right.
So the advantage is very obvious because all of the contracts are customized contracts. Mm-hmm. All of the contracts clauses are customized. So it's basically, in theory, you can trade anything. You can trade any type of derivatives contracts in this market, as long as there is a counterparty who want to trade with you, right? So this is a basic idea of the OTC derivatives market. And because of this huge advantage compared with the exchange market, the whole market size of the OTC market is much bigger than the exchange market. It's kind of like several times or maybe more than 10 times of the exchange market.
Right.
So the notional principle of the 2016 OTC derivatives market yes. is 483 trillion US dollars.
For the OTC market.
Yeah, 483 trillion US dollars.
And that's in 2016, did you say?
In 2016, based on the 2016 annual report of FIA.
That's an incredible number. Honestly.
Yeah, that's an incredible number. It's basically close to the M2 in United States.
So has it grown since that point? So you talked about...
it's still growing. It's still growing.
That's incredible.
So this market is very, very huge.
Okay, so let's talk about that for a moment. Brian, let's talk about that in relation to, obviously there's been market incidents we know of very recently, but what are the barriers that we find in terms of things like pegging the value of current fiat currencies in relation to these moves to essentially exchange anything via the OTC? What are some of the barriers that you're finding even at the governmental level, especially when you're considering blockchain, as we'll talk about, but transitioning into a space whereby you can essentially trade anything? Are there any barriers that you know of that are preventing you or precluding you from really developing this technology?
You mean the barriers for us to developing?
Yes, because if you can establish an OTC market, and as you said, it's already happening, it's in a very, very lucrative market, but there are no doubt some issues with the models that have pre-existed and moving across into the OTCs, particularly with blockchain. So one of the key resistance issues is essentially the pegging of fiat, and how are you going to manage that in the blockchain space? How are you going to ensure that there's true value in a very volatile market we're in? It's highly volatile right now, the blockchain arena.
That's right.
So because it's so volatile, how are you going to manage that?
You mean the volatility of the...
Blockchain itself is highly volatile in its movement and fluctuation in value for every blockchain, for every token. So because essentially you're going to be exchanging something of value, it has to have a deterministic, element to it. It has to have a marker of value. So moving back to those old models...
Let me make sure I get the question right. You mean the volatility of the token price will harm trading, right?
Well, not necessarily harm. The question is really posed to you is, how are you going to address that because of the volatility of those markets and of the tokens?
Yeah. Actually, this is a very good question. And this is a very vital part of the whole mechanism design.
Right.
Because somebody want to do the derivative trading for two purposes. There are two kind of purpose for derivatives trading. One is leverage investing, right? Mm-hmm. The second thing is to do hedging, to do risk management.
Right.
Especially for the hedging purpose investors, they really care about the volatility of the prices. Especially if you want to trade the derivatives on the blockchain with the cryptocurrencies. And the cryptocurrencies at the exchange medium is full of volatility, which will be very, very bad thing for the trading activities happened on the blockchain system, right? Yeah. So what we are gonna do is two things. The first things, all of the things are nominated in USD dollars.
Okay.
So which means if you are bullish about one underlying asset, and I'm bearish of one underlying asset, and we trade with each other, right? So the contracts would be denominated in USD or USDT, which is very stabilized.
Yes.
And the underlying assets go down or go up, and you earn $100, or maybe I lose $100. So it's $100.
And it's real American dollars. It's real USD.
Yeah, and all of the things you get is $100 equivalent FOTA or equivalent things, cryptocurrencies.
I see.
So this is the first mechanisms. But the second mechanisms is you will not open the margin accounts, but you will kind of like simulate the margin accounts because it's based on the smart contract system.
Yes.
We will deposit our margin money in cryptocurrency into the smart contract address instead of to the centralized exchange as the custodian or supervision side, right? Okay. So it's a different mechanisms. So this is what we basically do. So the second mechanisms is we will offer a token lockup service for the money you deposit in the margin. Let's say if you wanna lock up it to USD dollar. So let's say one FOTA is equal to $1 when you open a smart contract of derivatives. So when the smart contract matures, all of the money in this margin account system will equal the same USD dollars.
So essentially, it's a bit like a bank in that respect. Is that as these loans mature or as these investments into the smart contract mature, you reward them for that investment through the lockup.
Yeah, by the second mechanisms, actually, the major financial markets, like the security companies, sell you an OTC option of the one stock. They actually do the same thing. They sell your option, and they will do the hedging in the secondary market, and we will do the same thing for you. Yeah.
I see. So really, essentially, what you're doing is you're opening up investment opportunities via the OTC derivatives market to be much broader than it exists currently, especially through the blockchain. What is interesting also is that you're utilizing the smart contract system to really circumvent some of these middlemen that typically manage these, because the smart contract is going to do it in a much more automated way. So can you tell us a bit about the layering structure? Tell us in detail, how is it that this smart contract system works that's going to provide for the framework for this medium in this mechanism?
Okay, so this is another very good question. Actually, let's start with the core problems with the OTC derivative market.
Okay. Because
there are a huge advantage of OTC derivative market, which make this market a huge market, right?
Right.
But there are very, very obvious disadvantage of this market, which is you cannot control the counterparty risk very well. because it's a peer-to-peer transaction network.
Right.
So yeah, there is a huge credit risk. It's very hard to build a trust network,
especially at the moment with current technology.
Yeah, and there are three ways. There are three ways to solve this problem. The first way is you find a counterparty who is very familiar with you, or you are very familiar with him. Yeah, like Brad, you are a very old friend of mine, and you sell a OTC option of let's say a Google stock to me, which is fine because I believe in you.
But not the best model of business because it's subjective.
Yeah, I believe in you. You will not default when you lose the money.
Yes, until I default. Because if I lose my job,
the money.
Right, but the reality is not a best model, because if the circumstances happen, then I can't service the loan. I say sorry to my friend and he says that's fine. But the reality is that's not the best model. So what other models are we talking about?
Yeah. And the second way is I'm not familiar with you, but I also trust you because you are a very, very high profile individual or very high profile financial institution. Okay. Like a company listed in the stock market.
So image driven.
Yeah. You are a very big company. I will trust in your credit history,
and brand.
So I can trade with you on the OTC derivative market.
I see.
So this is the second way. And the third way in the traditional world in the traditional world is I'm not familiar with you, and you are not very big company or a very high profile individual, and I also want to trade with you only if you can find a guarantee agency to guarantee the transaction between you and me, and which will bring a huge charge for us.
I think that's the most important point, because the cost of the agency is significant.
Yeah. Let me give you a number. In Chinese market, there are two kind of agents offer the guarantee and the intermediary service for the OTC derivative markets. The first kind of company is futures broker company. The second type of company is the security companies in China. And these two companies will charge you at a 6% or 7% fee level.
Of your whole profits of.
Yeah. Let's say if we want to open a contract with $1 million, we need to give to $60,000 or $70,000 for the exchange for the intermediary cost or the guarantee costs, which is a ridiculous number in traditional financial world.
It absolutely is. And what you're alluding to is you're trying to redress these problems, these real world problems of expense for the people, so that we don't have to spend so much to enact these transactions as derivatives. So you're doing two things. You're opening up a market to a much broader sense to complement the already expansive industry, but you're also going to reduce the cost to do it.
Yes, this is why we want to make the world more transparent, more direct. I can trade with the Brad. I'm not familiar with you. You are not a big institution, and we don't have third-party guarantee services, and we can trust in each other's, which is super appropriate for the blockchain system to offer this kind of a service based on the consensus algorithm and the smart contract, right? So let me give a very simple version of the answer. Is in the centralized exchange, we open the margin accounts and we deposit our money in the margin accounts, which is supervised and custodian by the centralized exchange. This is the way they control the counterparty risk. And in the OTC derivative market, there's no way, because there's no margin account system. Your money stay in your bank accounts. My money stay in my bank accounts. Those of which there's no third party. So that's why we need third-party guarantee service, right? So if we utilize the blockchain system into it, and we open a simulated margin accounts, we deposit our money into the smart contract address.
I see.
As the margin money, instead of deposits into a third-party centralized banking account to be the custodian of your money, which will be the same effect, but you can trade with each other at a peer-to-peer transaction. And all of the contracts are flexible. All of the contracts are customized, personalized contracts.
Very fascinating, because you're automating the process. You're automating it.
Which means you can have the advantage of centralized exchange, and you can have the advantage of OTC derivative market at the same time.
Absolutely. What's very interesting, I need to ask you this now. Can you imagine what the centralized systems, the current centralized systems institutions must think of you? Because you are going to find a way, clearly with your technology, to circumvent some of these costs that we're currently incurring as citizens of many countries around the world. They are not going to imbue you well. They're not going to regard you, and it's not going to be something that they perceive you well, because you're going to take their market. So how do you feel about that? How would you respond?
Because I think blockchain, eventually the blockchain will change the derivative market. I believe that. Because there are something is actually in the financial traditional world is very ridiculous. The first thing is you can trade something on one exchange, but you cannot trade something on another exchange.
Right.
That's not very reasonable. Actually, the best exchange would be linked to each other. You can trade anything on anywhere with anybody, and if we build the exchange on the blockchain, we can realize it.
Right.
This is the first thing. The second thing is, you know what? All of the derivative trading actually happened in the financial world. The most volume is contributed by the high-profile individual and the big institutions.
Right.
But you know what? The long-tail market is a huge market. It's a very, very, very huge market in the financial world. But it is not fulfilled very well in the past.
I see.
Because of it's kind of like search engine compared with the Yahoo.
I see what you're saying.
Yahoo focus on the big institution of the advertisement customers, right?
Right.
So they can serve like several hundreds of the big institution of advertisements customers. But search engine like Google, like Baidu, can easily search millions of the small SME or individual advertisement customers.
I see.
Why? Because it is customized and they don't need sales to sell the things.
I see.
And based on the blockchain, based on the Fortuna, the whole business model is we are not kind of like Amazon. We are like Taobao. I don't know if you are familiar with the Taobao. Yeah.
No, I'm not sure.
Every small or private equities can open a store on Fortuna to design and sell their own products of derivatives. Let's say, Brad, you are very familiar with the options.
Yes.
You are a professional in the options, or you are professional small institutions of stock options. So you can open a store on Fortuna.
I see.
You can design your own options with popular deal structure, with popular margin ratio, with popular duration, all of the transactional elements of the contracts.
So obviously what you're doing is you're going to open up the opportunity for small business, enterprise in different ways, particularly in the micro sense, or even in the in ways which are innovative, whereby previously the barriers of simply integrating into financial institutions were unavailable because of all the regulations, of all the requirements, of all of the red tape. You're going to remove those things. Clearly, that's going to be, there's barriers going to be seen between your plan through the blockchain and what current models. I guess the thing we need to talk about now is trust, because there's issues of trust that are fundamental for this system to work, of Fortuna, because whenever we exchange any kind of product, any kind of means of value between us through the OTC system, we need to be able to trust each other on the blockchain. So how are we going to identify ourselves? What is the plan for you to ensure that you know me as Brad, I can identify my transaction and trust the system without problem. The smart contract's one, but are you going to partner with any company to ensure identification processes are compliant?
Actually, there is a misunderstanding in this, for you in our mechanisms. Actually, there is no need to identify who you are.
Okay.
We don't need to identify who you are. I don't need, and I can trade with you. Why? Because if you wanna, it's just like centralized exchange. You open an account on the CME and then you trade with somebody else like me, and I don't know you, because all of us trade with the counterparty, which is called the central counterparty, which is the CME itself, right? But based on the blockchain, we trade with each other, but we don't need to know each other, because based on the smart contract, and we deposit our digital currency into the smart contract, it will be executed automatically. It is code, so there is no possibility for you to default at the end of the contract, because all of the money are frozen in the smart contract.
I see. Yeah. So essentially, you're not going to be focused on trying to be a provision of trust, a mechanism for KYC and AML and that sort of thing. But what I do want to say is this, and this is important.
Only if the government need us to do this.
Okay, but let's talk about that, because governments are going to ask you to do that. There's no question of that. Even in China, they're going to ask you to have a degree of identification, but not necessarily through you. What I'm asking is, are you going to be part of a system whereby trust is afforded to users? Because what I'm saying is that at the moment, right around the world, in many different countries, KYC is extremely important right now to be able to identify the user. So what I'm saying is, it's very unlikely that a developed country is going to allow a derivatives company like you if there isn't some sort of robust system of KYC already in place.
Yeah, I mean, the KYC is not an issue. If the government need we do the KYC, we can do the KYC very easily. And there are very a lot of the KYC service agents to identify the authority of the individual person or the financial institutions actually. But on the blockchain, everyone is actually a node, right? What I mean is we will do the KYC things for the verification of the customers. But the purpose of the KYC is not about the counterparty risk. We can eliminate the counterparty risk based on the blockchain system, based on the smart contract things. But it's not, the counterparty risk is not about the KYC parts. KYC parts will not make contribution to the counterparty risk. Even if I do the KYC things for Brad, I know the Brad, but there is still the possibility for Brad to default in the derivatives trading activities. This is what I mean, those. But for the KYC things, the government needed to everyone, the trading volume of everyone, the tax they need to pay. Definitely, we will do the KYC things. Yeah.
Okay. Thanks for that. Okay, we might just move on to the next question. So Brian, can you please tell me about some of the features? Obviously, there's some really complex ones. The first one's obviously your DPOSA, your algorithm, your consensus algorithm. Can you tell us why that's so innovative?
Yeah, the first thing is we want to choose the mainstream consensus algorithm, and we choose DPOS instead of POS, POW, PBFT, right? So the main reason for we to do this is because of the efficiency. We need efficiency in a trading system, even if it's decentralized, but we also need the efficiency things. So we choose the DPOS, and we introduce the optimized version of the DPOS because the DPOS is about the more stakes you hold, the more voting rights you get. And the more power you can post on the whole mainnet, right, on the blockchain system. But we want to, add one more dimension, which is about the activeness, which means, Brad, you are a frequent trader on Fortuna. You're trading a lot, but by a lot, I mean you're trading a lot of times, but you don't have enough money, but you trade a lot. You require the derivatives for the leverage investing or for the risk hedging, you request a lot, and you are a frequent trader on the exchange, on the Fortuna, right? And we want you as the loyal customer of of the platform have more voting rights, have more power on the whole system. Instead of the rich people can see everything about this platform.
Okay.
So we need a balance between the small customers and the big customers, which could be a balance of the consensus algorithm. Yeah.
I see.
This is the basic idea of the DPOSA. Yeah.
I see. So essentially, you're trying to change the game and allow for a better position for the lay consumer, the one who hasn't got the huge asset base and isn't well positioned in the upper middle class.
Yeah.
Okay, that's interesting because that's the majority of people in the world. That you're going to try and facilitate. So that's interesting.
Yeah.
Okay, so if we talk about the next point with your key features, so we talk about that value locking system. We talked about that briefly before, but let's broach that slightly more and unpack it. Why is that so valuable?
You mean the FOTA value?
Yes, the FOTA value locking system.
Yeah, this is very, very important because if we don't offer this service, the hedging things or the leverage investing things could be nothing. Even if you do a right investing in the right direction. Let's say if you want to buy an option about the Google stock and you are bullish about the Google stock and eventually the Google stock go up, right? As you can earn the money, but the money in your margin accounts depreciates because it's cryptocurrency. And you lost $100 in your margin account, and then you win $100 through the derivatives trading. Finally, you get nothing.
I see.
Finally, you get nothing. Yeah. So this is the point of the FVLS, the FOTA value lock service. The only thing you want to do is I want to buy the Google stock and I want to use the options as a financial tool to leverage investing in the Google stocks or do some Google stocks risk hedging. And this is all of the things you want to do. Okay, we will offer the FVLS service to you. But if you want to trade FOTA or invest in FOTA, it's another story. You can hold in FOTA, and regardless of the service, you will not choose this service. You can hold the FOTA because you are not only bullish about the Google stock, you are also bullish about the FOTA itself.
Right. Okay, that made it really clear. So your next point that we want to talk about now is we've broached on the structured nature of smart contracts. But if we could talk about some of the other aspects, like for example, in your white paper it outlines that you have a main contract, you also have contract templates, and you have the PrC, the private contract. Can you tell us a bit about those three elements?
Yeah.
And also your derivative contract as well.
Yeah. The structured smart contract is a very, very important thing to solve another core problems of the OTC derivative markets. And one of the most important things we introduce is called structured smart contract, which means there is a main contract, which will clarify all of the untransactional elements about the default things, about the default management mechanisms.
Right.
And there are a second level which is called contract template levels, which will clarify all of the transaction elements such as the deal structure. It's an option, it's an American option or it's a European option. It's a forward or it's a swap or it's a swaption, the deal structure things. And what is the underlying asset of the contract template? It's a stock or it's a commodity or it's a foreign exchange. So
it's basically it's identifying the different types, the different modalities of investment.
Different types.
Right.
And the third level is the concrete contracts, which means the duration. You buy an option of 3 months or 30 days or 21 days, and what is the margin ratio? It's 5% margin requirements or it's 10% margin requirements.
I see.
Now, such as very, very concrete things.
I see.
So by the structured smart contracts, we can inherit all of the things from the higher levels, which will improve the contract creation efficiency.
I see.
So in the previous parts, I introduced we are a Taobao thing, we are Alibaba thing.
Yes.
Everyone can open a store and design their own contract templates for people to use, which will improve the efficiency of the people's creation of the contracts.
Right. So is it expensive to do something like that?
No, it's not expensive actually. All of the things you want to do is, you don't need to draft the main contract. You don't need to draft the contract templates. All of the things you need to do is to choose one popular contract template, and you fulfill some, very, very complex elements such as the duration, 3 months or 21 days, and the margin ratio, and you create a concrete contract.
Right.
And you can trade with each other. It is very, very friendly user experience.
Well, let's talk about. And let's talk about that. Sorry to interrupt, but this is such an important question because clearly the layering has been well thought out. It's a very technologically advanced system. I've had a look at the white paper. And technically, I mean, imagine that also it explains it in even more detail than technical white paper. But because it is so simplistic in the real world, do people actually need knowledge of smart contracts? This is important because people may misunderstand that you need to know about smart contracts to use them. But is that the case?
No, people don't need to do coding things on our smart contracts. That's why we, the QDM, the Neo Global Capital are our investors,
right.
Our angel investors.
I'm going to talk about that.
And and we are, we are also, insisting developing our own mainnets.
Yes.
Why? Because our smart contracts are a little bit different with each other. With other things, we don't need to support too much things. We only need to, customize our smart contracts into the special features required by the OTC derivative market, because it's a huge market. It's enough for us. If we want to do something very great, this market is enough for us, and we want to, design very, very, very appropriate features for the things. And by the smart contracts, all of the people needed to do is just like you choose something. You don't need to code something. Even if you want to do something, very, very special. Only things like if you want to create, let's say, contract templates. All of the things is you want to choose some deal structure like American option, European option, swap or swaption. Only if you want to do some very, very creative things, then you will do some coding things.
I see. So let's talk about also the requisite of technology. So if I want to enact a smart contract using the simple methods that you've provided with your technology, can I do that on my phone? What sort of technology will I require? Can I do it on my laptop? Can I do it on my, my iPad? These sort of things. How can I do?
On the laptop will be definitely, because the first version of our version is the web version.
Okay.
You can trade it on the browser. Yeah. Okay. And by the mobile things, we are very, very, we value the mobile things. It's a mobile world, right? And but if you are professional investors, you will not trade it with the mobile things. So maybe we will introduce the version of mobile things, but
things like apps.
Not all of the derivative contracts could be traded on the because some types of the derivative contracts are really, really complex, which is very hard to trade on the phones.
I think that's a good point to make, is that there's a flexibility as you evolve and as you improve your plan. You're certainly going to protect the interests of the user by making sure that they can only access the things that are suited to that technology. I see. Yeah. So let's talk about your decentralized quote, your quote system, or your quote scheme rather, with your SVD and your QL. You know a lot more about that than me. So what are we talking about there?
Yeah. Actually, this is about the clearing, the settlement stage of the smart contract, of the derivative smart contract. Because if you want to do a very, very right settlement of a derivative contract, you need the exact price of the underlying asset linked to the derivatives. Maybe it's stocks, maybe it's commodities, maybe it's gold, right? You need to know the price. And we don't want to be the quoting system be centralized, because it's very, very at risk, because somebody will do some manipulation of the prices. They will offer the wrong prices, right? So what we do is introduce the SVD consensus algorithm into it. The basic idea is like people who have the ability to offer the underlying assets price can apply to be a quoter node. And a quoter node will enter a quoter company, which is a bunch of quoter nodes, to offer the same price quoting services of the one kind of underlying assets. Let's say stock.
Right.
Okay. And the consensus algorithm will calculate the final results of the price quoting. And somebody's price quoting is the same as the consensus algorithm result, right? And someone's are different. And the more frequent you offer the quoting service, and the more right is the consistent with the consensus algorithm results.
Yes.
You will get more equities of the quoting corporations, which means you have more voting power, and which means you will earn more profits from the quoting corporations.
I see. So that's quite important because people want profits.
So that which means the better job you do, you will earn more, and you will become more influenceable, and you will be the some stars of the quoting corporation.
So Jason, thank you for explaining those very complex features. Obviously, it's not for everyone. It's not everyone's cup of tea, but they do need to know the value of them. But one of the most fundamental things about the success of any blockchain is their team. So my understanding is that you have core members. You have 8 core members of your team, but you also have a very robust team beyond that. So how big is your team essentially?
You mean give an introduction about our team, right?
No, not an introduction. I just want to know how big is your team?
Oh, how big are my team? Sorry. Actually, at the current stage, we have 23 persons.
Okay, so that's quite a significant number for a company that hasn't even ICO'd yet. So that's to your credit.
Actually, they are over that side.
They're over there, or working late, no doubt, because it's quite late.
Yeah. We will post our photos before the Spring Festival because we have an annual party for the Chinese Spring Festival.
Fantastic. I did notice that not everyone's there yet because there are your core members there. But one of your core members I did want to talk about, and his name is Jason Tao. Now, he is very experienced. I wanted to broach his knowledge and expertise because he's had experience in Alibaba, Microsoft, he's experienced in operating systems and cloud tech. So just how important is Jason to your team?
Yeah, Jason is a very, 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 very precious technical guy in China, maybe in the global market, because blockchain industry is quite a very new industry, and not so many people, not so many engineers have the real developing experience of the blockchain mainnet. Right. And Jason, Jason worked for the Microsoft and he also worked for the Alibaba. Yes. And he entered the blockchain industry since 2014 because he has a very, very good friend which opened the BTC trade and the GB.com, and which is a very, very big guy in the Chinese blockchain world, and they cooperate with each other very well. And Jason did a lot of the projects of the blockchain system for his friend, so he have quite almost 5 years of the blockchain developing experience, which is very, very old guy in the blockchain world.
Yes, and the reason why I broach it is because quite often when I talk about blockchain projects with CEOs, there's often a dearth of that kind of experience. Because it's one thing to have a good idea. It's one thing to have an amazing idea like the ITC derivatives. But it's another thing to have someone in your team who can actually make it happen on the blockchain. So that's why I'm broaching Jason, because he seems very important.
Yeah, Jason may be the most expensive persons on our team.
Yes, I can understand why. Let's talk about some of the strategic partners also. We alluded to them before in the discussion. We're talking about Loopring, Neo, Qtum. We're talking about Pavel, Roger Lim, but particularly these blockchains. Now, what I want to talk to you about now is that clearly there's going to be elements of KYC. Let's go and talk about this for a moment. Because these blockchains, firstly, are going to have their own systems, their own ecosystems that are going to house and store distributed data, to have even right to the point of identification situated and sorted. and done. So you don't need KYCs, we understand that. But just how important are these blockchains of NEO and QTIM, for example? Let's talk about the blockchains first and why they are so important to you as a partner.
Yeah. The first thing is they are not only our partners, they are our angel investors.
Okay.
Yeah. And
clearly there's a reason. We always find in the research, there's always a reason why they invest. So
yeah,
why?
The reason they want to invest is they are very, very exciting about our team, because our team has because the Fortuna things is a very big things. And it's not only requires one kind of ability, it requires several kinds of abilities. The first ability is the blockchain technology, right? These are the basic things. The second thing, you need to have a quantitative modeling ability of the derivatives, because the first customers or the first things who want to sell the first dozen of the OTC options or the OTC derivatives on the platform, it's ourselves. Nobody will sell the things, but people, very, very few people have the expertise and have the knowledge to, set up a pricing model, a risk management model for the quantitative things for the OTC derivative market. And we have the teams. We have a very, very strong team, which come from the OCC Option Clearing Corporation, which is the biggest option clearing company in United States, and their customers are NASDAQ, are NYSE, are CME.
They're the biggest to get.
The biggest, maybe the biggest institution for the OTC options in the world. Not all, for the derivatives in the world.
Okay, so that's really substantial. So let's go back to NEO. Let's go back to QTIM. They are some of the biggest essentially platforms, blockchain platforms in the world right now. And we have Ethereum, of course, as well. But these are also focused in China, which is, your main market right now as you begin. So do you think that there is a means in which these platforms can utilize your service in some way, can utilize your technology?
Sure, they can utilize. Actually, we are, launched some cooperations with very, very famous exchanges. By exchange, I mean digital currency exchange, because we have the ability to offer a similar services as the Bloomberg in the cryptocurrency world. We can offer very, very professional data services to do some very, very, very professional modeling things for people who want to design their own derivatives. And we think the derivatives would be a very, very vital tool for people to do risk management and the leveraged investing on the digital currency. See the BTC futures on the CME, right? All of the things. Yeah, all of the things. But different exchange like I don't give the example. Okay.
Yes, I know you can't give an example, but I understand.
All of the exchange, actually, all of the projects like QTIM, like NEO, they also need QTIM, NEO derivatives for risk management, for leveraged investing, for their community members, for their strategic partners, and we are quite professional in it. We are not only professional on blockchain, we are also very professional on the derivatives financial areas, which is a very precious things in this blockchain industry at the current stage.
Right. Now let's talk about Loopring. This is another interesting agnostic protocol. It's designed as such where it can even enfranchise multiple transactions, not just atomic swaps from one to one. So potentially could Loopring see the value and can be adopted and incorporated into your interesting technologies?
Yeah, Loopring is also very exciting because the founder of the Loopring is from PayPal, right? And they are quite familiar with the financial things, and they know the values of the financial revolution things. And the first conversation happened between me and the co-founder are very, very exciting. And their capital, which is called the Zhizi Fund, is one of our angel investor too. Of the capital. Yeah. And the cooperation mode in the future, we are still negotiating, but the basic idea is Loopring is about the payment peer-to-peer, right? But one of the things of the derivative trading is we need to solve some things is about the currencies, two digital currencies,
Right.
and you trade derivatives, and you get the digital currencies, and you will switch to currencies, right? So there's a outside circle which we need to solve for the payments, and that's the things maybe we will cooperate with the rubric.
I see. Yeah. So the conversions of fiat currencies into cryptocurrencies and back into, interesting. That's one big, very serious anomaly we're facing now that potentially could be solved. So thank you for making that clear. Let's talk about your tokenomics now. Clearly it's outlined in your FOTA allocation plan, how you're going to distribute, what your allocation is and for whom. So talking about your token event that's coming up, talking about your foundation itself, how is your distribution model designed and why is it designed so?
Okay, so our allocation scheme is basically like this. 40% is for the token generation event, which is completed already, yeah. And 30% will be frozen in the community fund, which is founded in Singapore. And it will be locked up for 5 years.
Five years. So that's making that whole section of the allocation very, very inaccessible, making the others, making it quite scarce.
Yeah, 5 years, and we will be, unfrozen. We will, be unfrozen after the publishment of our main net.
I see.
We will unfrozen the first 20%. Yeah.
I see.
To offer the value, FOTA value surface lockup surfaces. This is the main purpose of the first dozen of the FOTAs unfrozen from the community fund, and 15% is for the team rewards, and which is locked up for 4 years actually. Yeah, 25% 1 year, and 4 years or 3 years. Sorry, I didn't remember it.
That's okay. I mean, what I like about the design, though, is you're designed to ensure that there's the protections in place to make sure that parts of your token design are not available in the immediate phase, so that it doesn't flood the market. That's the imperative, is that we don't want to see a whole bunch of tokens flood the market because you haven't allocated some of it to be locked up.
Yeah. Actually, our total amount of the FOTA is 1 billion.
Okay. So your total maximum supply.
Yeah, it's 1 billion. Yeah.
I see.
And then another 15% is for the marketing. We needed to do some PR things. We needed to be listed on some exchange. Yes.
Yeah. Which is a very long, and let's talk about that as well. So currently, where are you situated with the processes involved? Obviously, Fortuna is a well-known project now. It's been already executed part of its plan. So where are you situated now in terms of exchanges, in terms of access for the public?
We are listed on 2 exchanges currently. One is called KuCoin, another one is called CoinEgg.
Okay.
And these two exchanges have a good relationship with us, and we are listed on their exchange at a very, very low.
Right. And no doubt, just watching your body language as well, no doubt there's other exchanges coming, clearly.
Yeah, clearly there will be other exchange coming, and we are negotiating the cooperation with very, very famous exchange.
Which is a nice hint because there's only a few that are famous. So let's talk about your roadmap now, Brian. Is that clearly there's some big events coming in the overall plan in this year. What are some of the key points or the key events planned that you want to mention?
Yeah, there are 2 key events will happen in 2018.
Okay.
The first key event is at the end of the Q1 or at the beginning of the Q2. We will publish our single node version of the Fortuna, which you can imagine it's kind of like a platform to sell the OTC options for digital currencies, and there will be binary composition options for several digital currencies, and there will be iron butterfly OTC options for several digital currencies. Yeah, to show the communities we have a lot of experience with the option with the derivatives design, the modern things, the risk management things. Yeah,
okay.
but it's a single node version. And the second big event is we will publish our mainnet at the end of the Q3. Yeah.
Okay, that's very significant because that's when everything becomes functional.
Yes. Okay. So this is the two biggest things in 2018. Yeah.
That's very exciting. Okay, so let's talk about one very important thing. Let's talk about, in a nutshell, what is the main difference? People might understand derivatives to be stock market. So I think it's important we clarify the distinction. Is derivatives something entirely different to stock market in the sense of what you're trying to achieve? So people understand. We talked about at the beginning about what OTC is. So once again, to clarify as we progress through to the end of the interview, can you just explain why OTC is not the stock market, essentially?
Actually, the derivatives market is not about derivatives is a kind of content about the price in the future, about various kinds of underlying assets, such as stocks, such as commodities, such as currencies, such as market indexes, such as digital currencies, you name it.
Such as anything.
All of the kinds of underlying assets. Stock is one of the underlying assets.
I see.
Just like bonds.
Yes.
But all of the prices of the underlying assets will fluctuate, right?
Yes.
So the price fluctuation will derived. The price of the derivatives are derived from the prices of the underlying assets, such as the stocks, such as the commodities, such as the bonds.
Yes.
So this is the difference. So the derivatives about the future, the underlying asset is about currents.
Yes. So essentially, derivatives are about derived values. Derived values. I see, and I think that's important for all the listeners, is because we don't want people thinking that you represent in any way one specific entity, because really you're representing the entire market itself. The entirety of all things can be have derived value.
Yeah, the derivatives for all things, but not all things itself.
Yes, but essentially through the translation of value, which is really fascinating. So let's talk about in the real context. Are you supposed to...
Let me add one more thing.
Yes.
Actually, one of the biggest problems in current blockchain industry is not about the trust network built on the blockchain.
Right.
It's not about the efficiency problem on the blockchain. All of the things on blockchain can be solved. But the tricky things, or the most difficult parts, is how you can move the assets onto blockchain. This is the very, very difficult part.
I see.
Once you move the assets onto the blockchain, you can solve all of most parts of the problems. But let's see, like the stock market, how can you move the stock onto blockchain?
You're asking me?
The Nasdaq, the NYSE, the A-share, the Chinese stock market, they will not agree with that. They will not move their stocks onto the blockchain.
Well, what I can tell you is there actually are countries doing that. There are countries right now who are working very diligently to transfer that kind of data into blockchain. Australia is one example of that, leading the way. It's a very complex thing to do, but there certainly are countries trying to do that.
Yeah, I mean, this will happen in the future. But at the current stage, all of the financial assets, or all of the real assets, are on the real commercial world are not built on blockchain.
Right.
And it is very, very hard for you to trade them on blockchain because you cannot easily move them onto blockchain. But in the derivative market, it is very, very nice for us because there's no need for us to move the real underlying assets onto blockchain. It is all about the expectation of the price in the future. You can trade your future opinion about the price of the real assets, about the stocks, about the bonds, about the golds, about the silvers, about everything. You are bullish or you are bearish. You want to buy the Google stock at $200 one share. You can make a direct contract with somebody else.
So Brian, in that respect, what would you say to the people who said, oh, but if you're banking on the future, if you're banking on the hope of change of value, isn't that just speculation? Isn't just derivatives speculation of the future and not focused on immediate value?
No. Actually, speculation, the difference between the speculation and the investing is very, very tricky.
Okay.
From my opinion, there are, actually, I mentioned before, the primitive purpose of the derivatives is for price management. You have the stocks, you already have the stocks, and you are afraid of the price down, which will make you lose a lot of money, right? But you need the underlying asset in your hands. Yes. Let's say the underlying asset is a real estate or the gold. You need the gold to produce something actually, and you have a lot of the gold in your warehouse. But you are very afraid of the the down of the price of the gold, which will cost you a lot of money.
Yes.
And the thing you cannot do is you cannot sell the gold, right? Because you need the gold. But with the derivatives, you can sell a derivative contract to someone else to fix the price of the gold, which will offer you a price management tools, financial tools for you. No matter the gold up or down, there's nothing related to you, and the only thing you need to pay is just the option premium, a little bit of fee. For you to get out of the price fluctuation. This is the one purpose. The second thing is kind of similar to your speculation things.
Right.
They will do some investings. They are bullish about the Google stock. They think they will from $200 to $400 a share.
Right.
And but I only have $200, and if I buy one share, I can only earn $200, right?
Right.
But if with the options, $200, I can maybe earn $10,000.
Okay, so we talked about pretty much everything. We talked about regulation. We talked about the technology. We talked about essentially how you're going to, I guess, facilitate a very robust decentralized mechanism for finance. You're going to allow people to do that through, potentially connections with other companies like Loopring. So to finish off, Brian, what's the vision? What is the vision of Fortuna in the next 5 to 10 years? What would you like to see evolve?
Okay. Actually, one of the professors of the Zhejiang University have a nice chat with me yesterday, and he asked me the question
Really?
About. Yeah, he asked the same question. What's the vision of the Fortuna? And I see one thing, and which is very big vision in the 10 years.
Okay.
So we want to be the CME in the blockchain world.
The CME. So can you explain what the CME is for those who don't know?
The Chicago Merchandise Exchange.
Okay, so just in terms of the world scale, how big is that? I mean, obviously I know what it is, but for those who don't, that's a very significant exchange.
CME is the Nasdaq.
Of exchanges.
Or NYSE in the derivative market world. It's the biggest. It is the biggest derivative exchange. Yeah, but we want to do something other than exchange, and we will be the new era of the derivatives trading platform based on the blockchain. So clearly, this is our vision.
So clearly you want to go global, Brian, and people are aware that you've initiated your movement and your technology in China. But what are you doing evidentially? Like, what are you doing pragmatically to build out your network globally?
Our network globally?
Yeah.
Yeah, actually we are founded in Singapore.
Okay.
And I cannot tell the details, but we have some motions in Singapore, and we have some motions with in Dubai, and because we have 4 Yale graduates at our team, and we will and we have Chicago University graduates, Oxford University graduates, and they have a lot of connections with a lot of elites in the Western world.
I see.
Especially in the investment banking world or the financial world, and we will launch our business connections with them and to do some promotion of our Fortuna.
Okay, so clearly when we talk about Yale, you mentioned that we can't ignore the reality that that is based in the US. So you're obviously looking at the US and the West. What about competitors? Are there competitors that are doing like plans and like models in the blockchain right now?
Actually, there's one competitor, and who just copied our white paper.
And you're willing to say that on record, that they just did that?
Yeah, we published a PR article in Chinese advertisement channel in our WeChat, WeChat public announcement channel, and most of the people know it. Most people in China know it. In the blockchain world, know it. And this project, I don't know. Maybe they are shutting down. Actually,
that's interesting. So essentially, there is no real viable competitor.
They just copy our white paper very directly. The diagram, the every words are now changed a little bit.
Have you got any? Are you willing to even hint to us what that company is?
The name?
Well, is it even worth telling? Perhaps it's not even worth mentioning. If they're going to go and copy you, let's not even mention them. Brian, honestly,
let's not mention it because it's gone. It's gone.
Yeah, and what's exciting is that essentially there is no mainstay competitor compared to Fortuna. You're leading the way. You're planning on being a global force in the derivatives market. You're going to revolutionize potentially, huge populations around the world, because as you explained, we're talking about trillions and trillions of dollars that's at stake, that's available to the blockchain given the right project. So Brian, it's been an absolute privilege talking to you. I've learned so much about derivatives. I've learned so much about how important they actually are right now, even in the current markets, let alone blockchain. And no doubt from here in your vision, for the next 10 years, we're going to see this hopefully evolve into that Chicago exchange. Hopefully you do become as big as you dream. But until then, I look forward to seeing you and watching you grow as a Fortuna company. May you grow into one that becomes on the Forbes list. But certainly you have earned the privilege, you have experience, you have the Yale backing, you have an amazing team. And 2018, 19, 20 is going to be very exciting years.
Yeah, very exhausting year, yeah.
Yeah, very exciting.
Actually, every member in our company never leave the company before 22 p.m.
So you're constantly working.
Yeah. Very strong basis. Yeah.
Right. Well, Brian Cai, it's been a privilege once again. Thank you so much for your time today, guys. This is Fortuna, the CEO, someone who's very experienced, a founder of the team, founder of the company rather, and going to be overseeing some very exciting initiatives as we progress in 2018. Thank you very much for your time, Brian.
Thank you, Brad.